Welcome everybody to another 144analytics.com update on the Fibonacci retracements. Before we get to that, we also have on this chart today our secondary Gann lines, which are based on Gann's natural law, the law of vibration. And these are the areas where the market will tend to vibrate in between. So you can see here on this chart alone just how the market's reacted to these levels. They stay constant and are very good for support and resistance and targets and also swing points. But from there, I wanted to put this video together because it is covering the last 10 days in Bitcoin, and this is an hourly chart, and it's been some of the wildest trade in Bitcoin, and you could say there's no rhyme or reason for what this market's doing, but I say different, and I want to just show you why I think so, and it goes to why we think the Fibonacci retracements are the underlying structure of all markets, and we've done videos to that. We've done how to use the Fibonacci retracements and the intro to Fibonacci retracements. We suggest you go through all of them. Some of them are of time importance because of the actionable information on it, but the rules and guidelines throughout it are all extremely important and will be timeless because these are the things you have to watch. So a quick review. 38 and 23.6% should always send you to new highs. Failure to do so tells you the trend is changing. 61.8 and 78.6 should send you an equal amount back the other way. So 61.8 should send you 61.8 back the other way of where you just came from. So I want to show you just a couple things here of how the market turned. We could go back farther, but we'll just take the last 10 days when the market had a really good setback here and on the 4th of this year. So our first setback here, if we start going with the Fibonacci retracements, is we see that this break here already took out 38%. So that tells us that the low should be in. Now the thing is that either not making that new low or new high based on which the direction is a lot of the times you will go to 61.8 or 78.6 before you turn that market around. So our first retracement here goes up and we come back into 61.8. So we take this down here. We got that there. So as the market moves up, we've got the market really becomes very strong, and all we're able to do is go to 23.6%. And as we say, we should always see new highs after that. Then we come up to here, 23.6. You can always trade below it. Our key thing is that you do not close below it, and 1 is okay. And in this case, we're dealing with an hour, so usually we're talking about the day. Now, again, on to new highs from this area, and here we go up to the the all-time highs. Again, from that low, 23.6% hits that exactly. Here we are. Now, here's where things change, and this is what you always have to look for. Just as we did down here when it took out 38%, didn't make that new low, or even if it held it and it didn't make the new low, still we're looking for a decent retracement to come back and or no new high. So in this case, 23% sent us right here, no new high. Okay, we know that was the first sign something's wrong here, and we should look for more on the downside. So the next thing is they take out 38%. That's here. 38% of this move. So now we know once this area comes out, we can start looking for retracements back up. And if the market is going down, it should hold 38.2%. So we go here, 38.2%. once again, right here, onto new lows. Now this is the thing that why we're showing you this video again, is because here we are, 23.6%, hits here, comes down, and fails to make that, let's see here, we'll just copy this, tell you this is the 23.6% in here, and the failure to make that new low was this first sign of something changing. And as we mentioned before, those lows, I know it's getting a little tight in here, but that was 78.6% back, and then on through 38% here. And as we said, the setbacks to start before they get the new trend going can always be 61.8, so, and 78.6. So here we go. We put this one here, 61.8, and then the market takes off. So where we are right now, we're looking at, as long as this market stays above 37,800, let's call it, the market remains extremely strong. And if it comes down here, holds this level, and doesn't make the new high, you're going to get the same scenario you had down here, and it's just a constant flipping back and forth. One other thing I forgot to mention in here, if you were following us in our long-term views and the Fibonacci retracements, and also the major Gann squares, not the secondary, we had 33,000 as our swing point, long-term swing point off of this 42,000 high. And we traded below it, but they never closed below it on a daily basis. Came back to test it. This is also where we hit 61.8, and on we go. So really, in order to change this whole trend currently, we would have to take out 38% based on the 38.2% rule. So it just happens to be a secondary Gann square right in this 36,500 level. So we're still looking for new all-time highs, and that is your area to watch. Again, if it comes down to 23% and reacts from that, cleanly, fails to make that new high, you have something changing, just as we did down here. Now, all of these things, we could do this exact same thing in Ethereum, and we probably will tomorrow. We'll have it posted on barchart.com, where we have the written out version of instead of the video here. But same thing, wild markets, and all they do is adhere to all these numbers, nothing new. So please check out our other videos, check out our blog. You can find out all the rules and guidelines to Fibonacci retracements. Please subscribe, and also sign up for our newsletter on our blog. We'd appreciate it. Have a good night.